What if one headline, just one political decision, could move your investments overnight? And what if I told you that even something as unpredictable as Donald Trump dominating the news again could actually make you a calmer, smarter, and ultimately richer investor? Sounds crazy, right? But here's the truth. Most people don't lose money because of the market. They lose money because they react emotionally at exactly the wrong time. And today, Money Monkey is going to show you how to stay calm while everyone else is losing their mind. What's up, everyone? Welcome back to Money Monkey, the only place where a monkey teaches you how to build wealth, step by step, without hype, without stress, and without gambling your future away. Let me paint a picture for you. It's a normal evening. You open your phone. You check the news. Big headline. Markets drop after new Trump announcement. Your heart rate goes up. You open your portfolio. Red numbers. -3%. -5%. Maybe more. And suddenly, your brain starts racing. Should I sell? What if this gets worse? Maybe I should wait. Now let's switch scenes. Same day. Same news. Same market drop. Money Monkey is sitting in his jungle. Laptop open. Charts on the screen. Banana in hand. He looks at the market. Takes a bite. And says, bananas are on sale today. That right there is the difference between losing money and building wealth. Let me tell you a deeper story. Two investors. We already met Panic Paul, but now let's understand him better. Paul is not stupid. He's actually careful. He works hard. He saves money. But he has one problem. He listens to everything. News, friends, social media, experts with loud opinions. So when Donald Trump talks about tariffs, Paul thinks, this is bad for the economy. When markets drop, he sells. When markets recover, he waits. When things feel safe again, he buys at higher prices. Over and over again. Now Money Monkey? He has a completely different approach. He doesn't try to predict. He prepares. He builds a system that works no matter who is president. Because here's something very important you need to understand. Markets existed long before Trump. They will exist long after him. The same is true for Joe Biden and every future president. Different leaders. Same long-term pattern. Growth. Let's look at reality for a second. During Trump's presidency, we saw corporate tax cuts that increased company profits. We saw trade conflicts with China that created volatility. We saw sudden announcements that moved markets quickly. Fast forward. Different administration. Different policies. Still volatility. Still growth. So what's the conclusion? Politics changes the path, but not the destination. And that's a powerful idea, because it means you don't need to predict politics to succeed. You just need to stay invested. Now let's go even deeper. Here's something most beginners don't realize. The stock market's biggest gains often happen in very short periods, sometimes just a few days per year. If you miss those days, your returns drop dramatically. And guess what? Those big positive days often come right after big negative days. So when Panic Paul sells during fear, he misses the recovery. Money Monkey stays and benefits. Now let's make this painfully clear with numbers. Imagine two investors again. Both invest $300 per month. Both start at the same time. Investor A stays fully invested. Investor B misses just the 10 best days in the market over many years. Result? Investor B can end up with significantly lower returns. Same market, same money, different behavior. Now let's build your system. Because knowledge is useless without action. Step 1. Choose a simple ETF. Broad market. Global exposure. You don't need 20 ETFs. You don't need complexity. 1 or 2 is enough to start. Step 2. Set up a monthly investment. Automatic. No decision making. This removes emotion, and emotion is your biggest enemy. Step 3. Increase your investment over time. When your income grows, your investments should grow too. Even small increases make a huge difference over decades. Step 4. Create a no panic rule. Write it down if you have to. I will not sell because of news. Money Monkey literally has this rule carved into his wooden desk, right next to a banana stain. Step 5. Limit how often you check your portfolio. Checking daily increases stress. Checking monthly or even quarterly is enough. Because remember, you're not trading, you're building wealth. Now let's talk about something deeper. Your mindset. Because this is where the real game is won. You need to stop thinking like a consumer and start thinking like an owner. When stock prices drop, most people feel pain. But if you truly understand investing, you realize something powerful. You are buying ownership in businesses. And when those businesses go on sale, that's a good thing. Imagine your favorite supermarket suddenly offers everything 30% cheaper. You wouldn't panic. You would buy more. But in the stock market, people do the opposite. That's why most people stay average. Money Monkey doesn't think like that. He thinks like a long-term owner. Now let's bring it back one more time. Let's say tomorrow, another big headline about Donald Trump appears. Markets react. People panic. And you feel that pressure again. In that moment, you have a choice. Be Panic Paul, or be Money Monkey. React, or stay consistent. Think short term, or think long term. Because your future is not decided by one decision. It's decided by hundreds of small, consistent actions over time. At the end of the day, the market is not your enemy. Your emotions are. Control them, and you win. Follow the crowd, and you lose. So zoom out. Stay calm. Stick to your plan. And remember, even in the middle of chaos, the jungle keeps growing. And if you stay invested, so will your wealth. If you found this helpful, don't click away just yet. Right now, there are more videos waiting for you on your screen. And one of them might be exactly what you need to finally take control of your financial future. So go ahead, click on the next video, and keep learning. This is Money Monkey, and I'll see you in the next one.